The ultimate guide for U.S. expat taxes. Navigating the maze without losing your mind. If you've ever considered leaving the United States for the allure of cobblestone streets in Europe, the beaches of Southeast Asia, or the bustling markets of Latin America, you've probably daydreamed about the adventure, the culture, and maybe even the cheaper cost of living. But here's something that might not have popped into your head while you were imagining your expat life. Taxes. Yep, Uncle Sam doesn't forget about you just because you're sipping espresso in Paris or trekking through the Andes. But don't worry, I'm here to guide you through the maze of U.S. expat taxes. We'll keep it light to a point. After all, taxes might be serious business, but that doesn't mean we can't have a little fun. Why U.S. expats still have to pay taxes? Let's kick things off with the biggest question on everyone's mind. Wait, why do I still have to pay U.S. taxes if I don't even live there anymore? Well, the U.S. is one of the few countries that taxes its citizens on their worldwide income, no matter where they live. Whether you're making bank in Dubai or just getting by in Bali, if you're a U.S. citizen, the IRS still wants its share. It's like that clingy ex that just won't let go. But before you panic and think that moving abroad means double taxation, let me assure you that the situation isn't as grim as it seems. There are various deductions, exclusions, and credits available to help you minimize or even eliminate your U.S. tax liability. You just need to know what they are and how to use them. The basics. What you need to know. Before we dive into the nitty-gritty details, let's go over some of the basics. Here are the main things you need to keep in mind as a U.S. expat. 1. Filing requirements. If your worldwide income exceeds a certain threshold, you're required to file a U.S. tax return. The threshold varies depending on your filing status, single, married filing jointly, etc., and your age. 2. Filing deadlines. While the regular tax deadline is April 15th, expats get an automatic 2-month extension to June 15th. But if you owe taxes, interest will still accrue from April 15th. 3. FEIE, or Foreign Earned Income Exclusion. This is your best friend. The FEIE allows you to exclude up to a certain amount of foreign earned income from U.S. taxes. For 2023, that amount is $120,000. However, you need to meet specific criteria to qualify. 4. FTC, or Foreign Tax Credit. If you paid taxes to a foreign government, you might be able to claim a credit on your U.S. taxes. This helps prevent double taxation, meaning you don't have to pay twice on the same income. 5. FBAR, or the Foreign Bank Account Reporting. If you have foreign bank accounts with a total value exceeding $10,000 at any time during the year, you must file an FBAR. This is separate from your tax return and comes with hefty penalties if ignored. Deductions, exclusions, and credits, the Holy Trinity. When it comes to minimizing your U.S. tax liability as an expat, you'll want to get cozy with 3 key terms: deductions, exclusions, and credits. These tools are essential in reducing the amount of tax you owe or even eliminating it altogether. Foreign Earned Income Exclusion, FEIE. I touched on the FEIE earlier, but let's dig a little deeper. The FEIE allows you to exclude a significant chunk of your foreign earned income from U.S. taxes. But to qualify, you need to pass one of 2 tests. 1. Bona fide residence test. You need to be a resident of a foreign country for an uninterrupted period that includes an entire tax year. So, if you've set up shop in France and plan on staying indefinitely, you're probably good to go. 2. Physical presence test. If you're more of a globetrotter and don't want to commit to just one country, this test might be for you. You need to be physically present in a foreign country or countries for at least 330 full days during a 12-month period. Now, here's where things get interesting. I remember reading a forum where someone shared how they planned their entire year around the physical presence test, using a spreadsheet to track every single day spent inside and outside the U.S. It sounds intense, but if you're determined to maximize your FEIE, it might be worth it. Foreign housing exclusion. On top of the FEIE, there's also the foreign housing exclusion, which allows you to exclude certain housing expenses from your taxable income. These expenses can include rent, utilities, and even some types of insurance. But here's the catch. There's a cap on how much you can exclude. and the limit varies depending on where you live. For instance, if you're living in a high-cost city like Tokyo or London, your exclusion limit will be higher than if you're in a more affordable location like Chiang Mai. I once chatted with a fellow expat who moved from New York City to Bangkok. She was thrilled to learn that her housing exclusion would cover nearly all her rent, which was a fraction of what she paid in NYC. She told me it was like getting a tax break and a massive rent reduction at the same time. A win-win. Foreign tax credit, FTC. If you're living in a country with higher taxes than the US, think Sweden or Germany, the foreign tax credit, FTC, might be your best bet. The FTC allows you to offset your US tax liability with the amount of taxes you've paid to a foreign government. Let's say you're working in Denmark and paying Danish taxes. If your Danish tax rate is higher than the US tax rate, you might not owe any US taxes at all, thanks to the FTC. However, if you're in a lower tax country, you might still owe Uncle Sam some money, even after applying the credit. I remember a guy on an expat forum who was working in Switzerland, one of the highest taxed countries in the world. He was initially worried about double taxation but ended up not owing a dime to the US after applying the FTC. He said it was like the US government gave him a pat on the back for living in such a tax-heavy country. FBAR, the form that haunts expats. If there's one thing that strikes fear into the hearts of US expats, it's the Foreign Bank Account Report, FBAR. The FBAR is a form you must file if you have foreign bank accounts with a total value exceeding $10,000 at any time during the year. And no, you can't just pretend you didn't know about it. This form comes with some pretty serious penalties for non-compliance. The first time I had to file an FBAR, I was living in Mexico and had just opened a local bank account to deposit my freelance earnings. I didn't think much of it until I stumbled across a forum post where someone shared how they got hit with a hefty fine for not filing their FBAR on time. Let's just say I filed mine that same day. Here's the good news. The FBAR isn't as complicated as it sounds. It's filed separately from your tax return, and you can do it online through the Financial Crimes Enforcement Network, FINCN, website. The key is to keep track of all your foreign accounts and their balances throughout the year. A little organization goes a long way. State taxes. The pesky little brother. Just when you thought you were done with taxes, here comes the state tax situation. Depending on the state you lived in before moving abroad, you might still be on the hook for state taxes. Some states, like California and New York, are notorious for clinging to their residents even after they've moved overseas. To avoid paying state taxes as an expat, you'll need to prove that you've cut ties with your home state. This might include changing your voter registration, closing local bank accounts, and even getting rid of your US driver's license. I once met an expat couple in Portugal who had lived in California before moving abroad. They spent months meticulously documenting their move, from selling their car to updating their address with every US institution they could think of. It paid off, though. They managed to convince California that they were no longer residents and avoided state taxes entirely. Self-employment taxes. Freelancers beware. If you're a freelancer, digital nomad, or self-employed expat, brace yourself. Self-employment taxes are coming for you. Even if you're living abroad, you're still required to pay Social Security and Medicare taxes on your self-employment income. The current rate is 15.3%, and there's no Foreign Earned Income Exclusion for this one. But don't despair. If you're living in a country with a totalization agreement with the US, you might be exempt from paying self-employment taxes in the US. A totalization agreement is a deal between the US and another country that prevents double taxation on Social Security and Medicare taxes. For example, if you're self-employed in Spain, you might only have to pay into the Spanish Social Security system, thanks to the totalization agreement between the US and Spain. However, if you're in a country without such an agreement like Thailand, you'll still need to pay those US self-employment taxes. I once met a freelancer in Vietnam who was hit hard by self-employment taxes. She was making a decent living but hadn't realized that she'd still owe Social Security and Medicare taxes in the US. After a rather unpleasant surprise during tax season, she started setting aside 15.3% of her income each month to avoid getting caught off guard again. What if you don't file? The consequences of non-compliance. So what happens if you decide to bury your head in the sand and ignore your US tax obligations? I get it. Taxes are a headache, and the idea of dealing with the IRS while you're halfway around the world isn't exactly appealing. But trust me, it's not worth the risk. Failing to file your U.S. taxes as an expat can lead to some pretty serious consequences, including penalties and interest. If you owe taxes and don't file, you'll be hit with penalties and interest that can quickly add up. The penalty for failing to file is 5% of the unpaid taxes for each month your return is late, up to a maximum of 25%. Loss of passport. In extreme cases, the IRS can revoke your U.S. passport if you owe a significant amount of back taxes. Imagine being stuck in a foreign country without a valid passport. Not a situation you want to be in. FBAR penalties. As I mentioned earlier, failing to file your FBAR can result in some hefty fines. The penalty for non-willful violations is up to $10,000 per violation, while willful violations can lead to penalties of up to $100,000 or 50% of the account balance, whichever is greater. Criminal charges. While it's rare, failing to file your taxes or FBARs could lead to criminal charges. The IRS doesn't mess around when it comes to tax evasion. One time, I read about an expat in Thailand who decided to ignore his U.S. tax obligations for a few years. He was living the good life on the beaches of Phuket, thinking the IRS couldn't touch him. That is, until he tried to renew his passport and was denied because of unpaid taxes. He ended up having to pay a small fortune in back taxes, penalties, and interest, not to mention the stress of dealing with the IRS from abroad. Filing your U.S. expat taxes, a step-by-step guide. Now that you're thoroughly convinced of the importance of filing your U.S. expat taxes, let's go through the steps to actually get it done. It might seem overwhelming, but breaking it down into manageable steps can make the process much less daunting. Step 1. Gather your documents. Before you can start filling out forms, you'll need to gather all the necessary documents. This includes foreign and U.S. income statements, such as W-2S, 1000, and 99S, or foreign equivalents. Foreign bank account statements, if you need to file an FBAR, proof of residency or physical presence, to qualify for the FEIE or foreign housing exclusion. Receipts for housing expenses. If you plan to claim the foreign housing exclusion. Tax returns from your host country. If you're claiming the foreign tax credit. One year, I realized I'd been stuffing all my important tax documents into a drawer with no rhyme or reason. When tax season rolled around, it took me days to find everything I needed. Now, I keep a dedicated folder on my computer, with backups, where I store all my tax-related documents as they come in. Trust me, it saves a lot of headaches. Step 2. Choose a tax preparation method. When it comes to actually preparing your taxes, you have a few options. Do it yourself. If you're comfortable with tax forms and numbers, you can tackle your expat taxes on your own. The IRS website has all the forms you need, and there are plenty of online resources to help you along the way. Use tax software. There are several tax software programs designed specifically for expats, like TurboTax and H&R Block's expat services. These can make the process much easier by walking you through each step and ensuring you don't miss anything important. Hire a professional. If your tax situation is complicated, or if you just don't want to deal with the hassle, hiring a tax professional who specializes in expat taxes might be the best option. They'll handle everything for you and make sure you're taking advantage of all the deductions and credits available to you. Back when I was a fresh-faced expat in Spain, I decided to go the DIY route. I spent countless hours sifting through IRS publications, trying to make sense of it all. I eventually got it done, but not without a few sleepless nights. The next year, I decided to invest in tax software, and it was like night and day. It walked me through each step, and I finished my taxes in a fraction of the time. Step 3. Fill out the necessary forms. Once you've gathered your documents and chosen your tax preparation method, it's time to start filling out forms. Here are the main ones you'll need as a U.S. expat. Form 1040. This is the standard U.S. tax return form. You'll report all your income here, both U.S. and foreign. Form 2555. Use this form to claim the Foreign Earned Income Exclusion and the Foreign Housing Exclusion. Form 1116. If you're claiming the foreign tax credit, you'll need to fill out this form. Form 8938. This form is for reporting foreign financial assets if they exceed certain thresholds. It's similar to the FBAR, but is filed with your tax return. FinCEN Form 114, FBAR. This is the form for reporting foreign bank accounts. Remember, it's filed separately from your tax return. Take your time with these forms, and don't be afraid to double-check everything. The IRS can be unforgiving when it comes to mistakes, and the last thing you want is to have to amend your return later on. Step 4. File your taxes. Once you've completed your forms, it's time to file. If you're filing electronically, you can submit your return through the IRS's e-file system. If you're filing by mail, make sure to send your return to the correct address for expats, which is different from the address for domestic filers. If you owe taxes, you can pay online through the IRS website, and if you're due a refund, the IRS can deposit it directly into your U.S. bank account. Just be aware that getting a refund to a foreign bank account can be tricky, so if possible, keep a U.S. account open for this purpose. Common expat tax mistakes and how to avoid them. Even seasoned expats can make mistakes when it comes to filing their taxes. Here are some of the most common pitfalls to watch out for. Not filing at all. Some expats think that living abroad means they don't have to file U.S. taxes. This is a big mistake. Even if you don't owe any taxes, you're still required to file a return. Forgetting. About the FBAR. The FBAR is separate from your tax return, and it's easy to forget about. Make sure you keep track of your foreign accounts and file the FBAR if necessary. Missing the physical presence test. If you're planning to claim the FEIE using the physical presence test, be meticulous about counting your days in and out of the U.S. Even one day too many in the U.S. can disqualify you. Ignoring state taxes. Don't forget about state taxes if you haven't cut ties with your home state. This can come back to bite you later on. Overlooking the foreign tax credit. If you're paying taxes in your host country, don't forget to claim the foreign tax credit. It can significantly reduce your U.S. tax liability. I'll never forget the time I met an expat in Thailand who hadn't filed his U.S. taxes in years. He thought that because he wasn't making much money, he didn't need to file. When he finally got around to it, he was hit with a huge bill for back taxes, penalties, and interest. The lesson here? Always file, even if you think you don't owe anything. Staying ahead of the game. Tax planning for expats. Now that you know how to file your U.S. expat taxes, let's talk about tax planning. A little bit of planning can go a long way in minimizing your tax liability and avoiding unpleasant surprises. Keep good records. This might seem obvious, but keeping good records is crucial for expats. Make sure you keep track of all your income, expenses, and foreign accounts throughout the year. This will make filing your taxes much easier and help you avoid mistakes. Consider the tax implications of major life events. If you're getting married, having kids, or buying property abroad, make sure you understand the tax implications. Major life events can have a big impact on your tax situation, so it's important to plan ahead. Stay informed about tax law changes. U.S. tax laws can change from year to year, and what worked last year might not work this year. Stay informed about any changes to expat tax laws and adjust your tax planning accordingly. One year, I was caught off guard by a change in the FEIE limit. I hadn't been paying attention to the news, and it wasn't until I started filing my taxes that I realized the limit had gone up. I ended up having to redo part of my return to take advantage of the higher exclusion. Now, I make a point to check for any tax law changes before tax season starts. Work with a tax professional if necessary. If your tax situation is complicated, or if you're not confident in your ability to handle it on your own, don't hesitate to work with a tax professional. A good expat tax specialist can save you time, stress, and money in the long run. Let's wrap it all up. You've got this. Filing U.S. taxes as an expat can be a daunting task, but it's not impossible. By understanding the basics, taking advantage of deductions and credits, and staying organized, you can navigate the process with confidence. And remember, you're not alone. There's a whole community of expats out there who've been through the same thing and are happy to share their experiences. So don't be afraid to reach out for advice or support when you need it. If you found this guide helpful, be sure to subscribe to Dream Expat Destinations for more tips and advice on living your best life abroad. We're all in this together, and I'm here to help you every step of the way. See you in the next video.